Side.
This is Leon Byner.
We have had several consecutive rises in interest rates, and we're well into getting near 7, and Lord knows where this is all going to end. Of course, this doesn't just impact on loans, but it also does on cards too. Let's just get a snapshot of what's going on, and I thought we'd go to somebody from an organisation that tracked this. It's called Joust. Mark Bevan is the bloke. Mark, can you give us a bit of a preview of where you think interest rates are going to go this afternoon when they make their decision?
Yes, Leon. Look, at Joust, we're a bit fearful that it might be a full half of a percent increase this afternoon.
Half.
Most of the economists, I think it's 35 of 39 economist surveys are predicting 0.25, but I follow the Westpac's chief economist, Bill Evans, and he's a bit worried that it could be 50.
Goodness. Now, again, what's driving this?
Inflation is the big thing, without a doubt, Leon. The pressure of global inflation, and we haven't been immune from it here either.
So, really, doesn't that actually, it seems counterintuitive in a way, doesn't it? That, and you can explain this because you're in a great position to do so. But if you actually put up the cost of money, that in itself is inflationary, isn't it?
Yes, well, that's right. It's just another addition to the cost of living that's going up. Yes, but of course, ultimately, it has that that self-fulfilling situation where eventually, people's budgets just get so tight they've got to pull back on some other area, and that has the effect of reducing demand, and then hopefully we see prices come back down.
When did that last happen? Because it seems to me we keep doing this. And pressing the envelope on increases in rates.
Yeah.
Because, you've made the point, and I take a lot of notice of what you say for obvious reasons. So when are we going to see this down curve happen?
Well, I think the hope is that maybe at the end of 20, we might see a bit of a pause from the Reserve Bank at the start of next year, and they'll be sort of watching the data very carefully, but hopefully not applying any more increases.
Yeah.
And then if the signs are right, potentially, the interest rate cycle might turn and we might get some cuts. But we wouldn't be forecasting that to happen before 2024.
I just want to address credit card interest rates because often they don't get talked about much, but they're pretty important in this, aren't they?
Oh, look, they can be. If for those people that need the credit card to get through from payday to payday and can't afford to pay off the balance at the end of each month, that can be sort of a very expensive way of funding your expenses. Historically, credit card rates can be as high as 18%.
18.
The banks aren't in a real rush to drop them down because they sort of sneak under the radar a bit.
Yes.
As you say.
Are we in need of some sort of regulation on this? Can they charge whatever they like on this?
Look, they can really. The regulation, I guess, of credit cards is a little bit difficult, Leon, because the option is there to pay it off in full.
Yes.
Each month. So if we can self-discipline ourselves as consumers, potentially a credit card can cost us nothing. But,
well, indeed. What proportion, now you'd know this, what proportion of credit card holders pay their balance to zero each month? Do you know?
I've been out of banking for a little while, Leon, but I would have thought it might be a down the middle type of split. Half
Sure.
people would pay it off in full, but there'd be plenty of people that just haven't got the either the income or the resources
Sure.
to work that credit card down, and that's a pretty expensive form of funding.
All right. So where do we stand with home loans right now?
Well, it wasn't that long ago, less than 12 months ago, our Joust customers were getting home loans at 2%. And really, if you could use Joust to shop around now, probably after today, and you won't find anything that hasn't got a 5 in front of it.
Gee. So it's gone up that much. Why?
Well, again, the Reserve Bank are desperately trying to keep inflation under control. Just in the last couple of weeks, the inflation rate was published at 7%, and that's I'm sure that's ringing alarm bells.
I bet it is. I bet it is. Because basically it means if you've got $100, it only buys 93 cents worth.
$93 next year. That's right.
Yeah,
and look, I mean, and there are other signs that'll be worrying your listeners as well, Leon. I mean, the budget was handed down a few weeks ago, and the forecast in there was that power bills will go up by 30% next year and 20% the year after. So those things all add up, and they're elements in cost of living pressures.
I want to ask you something. Is it within the purview of any government to be able to price cap some of these discretionary expenses from utilities?
Well, it was interesting. Liz Truss over in the UK thought that was a good idea, and that didn't play out particularly well for her.
No.
Dan Andrews over there in Melbourne, I think, I've read recently about an initiative to resurrect the State Electricity Commission and potentially, bring back some of those power assets from private ownership. So I'm sure he's got that type of thing in mind. So it's a challenging topic, Leon, certainly.
Yeah. So again, can you unscramble that egg though? Once you've sold off an entity, and then you've thought, hang on, I don't like the way this entity is being run, it's not so easy to go back to where you were, is it?
I wouldn't envy the task. I agree with you 100%, Leon. Yeah.
So again, what sort of strategies are there available to do the best you can in this very challenging environment?
Yeah, well, look, again, I'm not an energy expert, but regulation appears to be, the only way to make it, to prevent the energy companies from charging whatever the market price is. And we've talked about it before on your program.
Yes.
The lack of transparency in some of these markets. How would you and I ever know what a fair price is for turning the lights on
now,
or putting the air conditioner on?
On interest rates, we've had several consecutive rises.
Yes.
Is there anything anybody can do to somehow modify this, or is it really just up to the market?
Well, the market will do. The market will do what the market will do. For consumers, of course, they can talk to their banks or mortgage brokers about fixed rates.
Yep.
But again, with the way that rates are forecast to go, fixed rates are in a lot of cases dearer than a variable rate. So they're not particularly attractive right now for people.
So really, it's just you're going to have to try and manage these stormy seas best you can. Is that the message really here?
Yes, and look, the conservative message, of course, is pay down your debt as best you can, pull your horns in, and just save as much as you can to keep your debt as manageable as possible.
Yeah. One question. We used to be very good at doing this. Have we diminished our ability to be good, or is it just that there are so many other discretionary purchases and expenses now we just haven't been able to?
Oh, look, I'd describe that, Leon, as a generational thing. When I look at my children's generation,
yes.
I would say that they're perhaps not as good at going without as perhaps yours and mine.
Yes. So the message here from your point of view is?
I think be prepared for a pretty tough 12 months. Don't let your debt get out of control. Pay it down where you can to keep that interest bill to a minimum. And think services like Joust can potentially find a way into a lower rate home loan.
By the way, when you look at these various rates and you want to switch, is it very competitive, or are they all about the same? Because often people say shop around, but then having done that, there's not a lot of difference. Is there in this case?
Oh, I think, it only takes a 0.5% or 0.75% to make a huge difference on a $500,000 loan, Leon.
Yes.
So, it's worth people's while. They call it the inertia tax, if you like, or the loyalty tax.
Yes.
Of not being bothered shopping around or sticking with your current provider. Now's probably not the time to be fanatically loyal.
Mark Bevan, thank you. He's good, isn't he? He's the founder and director of an organisation called Joust with some really good advice.